Greetings everyone, welcome aboard. Joseph James, schooloftrade.com. Today was July 14th, 2010, guys. Well, I don't want to say it, but we barely missed the $1,000 gold today. But guys, we came really close. Let's take a look at this. Before we take a look at the trades we took today, though, I want to remind you guys of the blog. Now, if you're watching the video right now on the blog, guys, there is a ton of great resources on the blog. Now, first of all, right in the upper right-hand corner, use the search box. Okay, use that search box, upper right-hand corner. We have 24/7 live support. If you have any questions about membership or about technical support, or if you want to say hi, or maybe we called a trade and you want to know where we took the entry at, use the live support button. Right below live support, you've got our Twitter, our Facebook, our YouTube pages, right? Lots of great videos on our YouTube page that you can't find on the blog. And then right below that, that's where you can follow the blog. So in the lower right-hand corner, click on that friendly button that says follow, and that way you'll get an email every time we post a new article, a new video, a new live trade call. It's all here in the blog, guys, and you can follow the blog. You don't need to be a member. We don't even need to know who you are. Just simply follow the blog, and you're going to get everything in real time. That way, the next time we call a two-step reversal off the high of day on gold futures, you're going to be able to take it right along with us. All right, guys, so make sure you guys pay attention to the blog. Let's take a look here. 2, 4, 6, 8 total trades. Well, now you can see here by the color of our snapshot here, of course, we did 98 ticks, 980 USD today, guys. At about 10:30 this morning, right, my exact words were, guys, I don't think we're going to hit our gold today. And boy, an hour and a half later, we're 2 ticks shy of that 100-tick goal, right? It was almost comedic today how just it literally, about 45 minutes after I had said that, all of a sudden the market started moving for us. We got some great trades to finish up our day, and we're just shy of our 100 ticks today. So 8 total trades, 98 ticks, 980 USD. That brings our weekly total to 4,300, our monthly total to a little bit below 12,000, and we're just shy of 85,000 for the year of 2010. Let's keep moving. What's the most important thing that happened today? Well, of course, first of all, we're looking at the third Friday of the month is this Friday. Okay, so OPEX week is upon us. Now, this is one of those OPEX weeks, guys. It's not a quadruple witching, right? It's not the quarterly OPEX. So it's kind of one of those run-of-the-mill OPEX weeks. And here we are Wednesday morning on what we call Wacky Wednesday. Now, we talked about Wacky Wednesday today in the live trade room. Okay, Wacky Wednesday is classified by lots of kind of impulsive and really for the most part, very sporadic periods of excessive volume in the market. Okay, and what happens is the traders who are managing their portfolios in preparation for when options expire on Saturday, okay, they begin doing that on Wednesday. So Wednesday is called Wacky Wednesday, right? And what's going to happen is you're going to see lots of these big chunks of orders coming in that will give us a little bit of a hard time to tell. Should we be getting in right now? Should we be staying on the sidelines, right? Because as you guys know, we do a lot of tape reading. We watch volume. Okay, we watch the basic fundamentals of price movement. And so when we see lots of big lots coming in for no reason, okay, buyers, sellers, right, all of them, that gives us those false signals whether to stay in a trade or maybe to get into a trade altogether. So combine that with some summertime trading, and you had a period of low volume, right, valleys, but then these real strong increases in volume and speed because of Wacky Wednesday. Okay, so kind of an interesting scenario here. Then you throw on, we've got 2 o'clock FOMC news today. Now, why do you think the 2 o'clock news would affect our morning trading? Well, because people are waiting to see what that 2 o'clock news is going to be. So we got Wacky Wednesday, crazy volume. We've got summertime trading, which means expect low volume. And then we've got the FOMC news at 2 o'clock today, which means we probably are going to see the smart traders waiting till 2 o'clock before they make their decisions. Okay, so we knew all this morning, and we kind of expected things to be a rough day. But wait, right? We got almost our $1,000 gold today. What happened? Great example today. You can never give up on your trading day. Now, I'll be the first to admit, guys, when I was a new trader, if I would have woke up and saw, right, that we didn't have any volume, FOMC news, summertime trading, Wacky Wednesday, I probably would have closed down my charts as a new trader and walked away. But guys, we talked about that today in the room, right? I don't do that anymore. And I really don't want my clients to do that either, because you miss out on all of this learning opportunity to listen to the market. Guys, remember, guys, live price action is the most valuable learning opportunity you'll ever have. You cannot replace the real deal with market replay or looking back in hindsight. All right, so never waste a trading day. Don't give up on your trading day, guys, because you never know when things will change, just like it happened today. Now, guys, the first thing we saw today was the narrow trading ranges. Now, look at this chart on crude here right now. And I think you can probably see exactly what I'm talking about, right? You've got yesterday's trading range, and then you've got today's trading range. So you've got yesterday's trading range, right? 300 ticks wide from top to bottom. And then you've got today's trading range from 45 to 37. It's about 100 ticks wide. So we got 1/3 of today's trading range was showing up at about 9 o'clock Eastern time. So when we opened up our chart this morning, we said, whoa, 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 clearly something is here keeping this market very tight and narrow. That was the first heads up that we were going to have ourselves a little bit of a rough ride this morning. Then we looked at our faster charts and we noticed here on crude, we had a wedge pattern on the fast chart. Now notice it's at 9 o'clock here. Okay, we had a wedge pattern, right, on the fast time frame. Notice also too, where are we? We're right above 76.50, right? The big half, big round number. And then follow me down bottom here and you can see the pace of tape indicator was showing the speed was dropping. Okay, so speed dropping into the 9 o'clock open on crude. We had a sideways wedge pattern, guys. This tells us right off the bat, okay, be on the lookout for a tough day on crude today. Okay, now fast forward a little bit, and here's a great example, guys, of exactly what we saw pretty much all day today. First of all, let's look at the pattern first. Here's a breaker pattern long setting up here at the high of this range. Okay, the breaker pattern long is real easy. We're going to mark up our swing high. We break above that swing high, and there's your breaker long, right? That's the breaker long. But notice, guys, how we came up. We made our second test here, and then we came right back down. Now, guys, we saw this all day long, and this is a classic example of a low volume day. Now, follow me down bottom here and look at momentum. Now, notice how momentum was overbought at both of these highs. Okay, now take a look again. Match up, right? Line up the tops of momentum with the tops of price. And what do you see?